Hey, it's Steven from Real Life Trading. I have a short video for you today on buying the dip. The date today is July 18th, 2022. You can see that since the beginning of the year on AMD, on the daily chart, is what we're looking at, we have been in a bearish downtrend. So the tips and tricks I'm going to share with you today for buying the dip, more applicable in a bullish market with a bullish uptrend versus the bear market. It's not to say that you can't buy the dip in a bearish market, but you can see here that every time you have bought the dip, you would have had to be quick with your exits because it just kept going lower and lower. So for the purposes of this video, we're just going to focus on the bullish area over here. But what I want to first point out to you is that different tickers, different stocks are going to respond differently to different moving averages. So the first thing you could do is simply look at AMD on a daily chart and look to see if there's a specific moving average that AMD likes to interact with. And this purple line here is the daily 200 simple moving average. And you can see that AMD does like to come back down to this. So every time AMD gets far away from that moving average, it likes to come back down to it, bounce, come back down to it, and you'll see that pattern over and over. Now, if you go to the weekly chart, you can see that on the weekly, AMD favors this blue line, which is the 50 simple moving average. And you can clearly see here where price got away from it, came back down, and it tested that 50. It rode along it for a little bit, got away from it, came back down, got really away from it, came back down. So the moving averages act as magnets, pulling price back to it. Now, you could simply just use those moving averages for buying the dip. But what I'm going to share with you today is the strategy that I use and how I look to buy the dip. So if I go back to a daily chart, we are going to focus in on AMD into this area right here. If we look at this chart of AMD, we can clearly see that AMD made a nice bullish move here, pulled back some, made a new high, pulled back. Now, kind of made a double bottom here, attempted to come back, failed. It didn't get back up to the high. Here, it definitely made a double bottom, found support, and then eventually made a new high right here. So if I'm watching AMD and I see that this found this double bottom, got up here, made a new high compared to this point over here, retraced, came back up, made a double top, and then it's now looking like it's going to pull back, this is where I start setting up my areas where I want to try to buy the dip. So all I'm going to do is, this is the trick I want to share with you, is you go to style, and you can do this on any trading platform. And I'm going to go into here, and instead of a candle, I'm going to change it to a line chart. So when I change it to a line chart, what that does for me is it eliminates what I refer to as candlestick noise. When you have the candlesticks on, there's a lot of candlesticks, and it's hard to clearly see those levels of support resistance. If you change it to a line chart, all you're looking for are the peaks and valleys. So if I just start dropping in lines here on each of the peaks and valleys, I have one here, I have another one here, one here. If I come back down, another one here at the low. And all I'm looking to do is have as many touch points on those lines as possible. So I have a touch point here. I have several touch points through here. Again, this is the double top that we've been looking at and thinking if it pulls back from here, we want to start legging in and buying. And what I want to also mention before I go any further is that when I do this, what I'm looking to do is I'm not going to go all in at one level. I'm going to establish multiple levels where I'm going to buy a little bit here and a little bit there. Ideally, I want to end up with lots of 100. So that could be buying 25 shares at 4 different levels and ending up with 100 shares, or buying 50 shares at 2 different levels, ending up with 100, or ending up with 2 lots of 100. So a total of 200 shares. And the reason I'm doing that, reason I want to try to approach it that way is I want to be able to sell covered calls against this. And if you know anything about options and covered calls, one contract equals 100 shares. So if I want to sell one covered call, I need to have a minimum of 100 shares to do that. So that's why I'm always trying to buy and accumulate shares that are equally divisible by 100. I'm going to drop in another line here as I'm looking at this chart, another line right here. So here are multiple levels that I can look to buy on a pullback. Now, this first level is really just off the highs here. So I'm going to immediately discount that. I'm not going to look to buy there because I'm going to be looking to buy as low as possible. And that just is not as much of a pullback for me as I would like to see. So if I remove this line, here's my 4 levels that I'm going to look to potentially leg in and buy. But before I do, I'm going to go back to the weekly chart here. Again, I have to zoom in on this level area right here because this is that double top that we were just looking at. So on the weekly, what I now want to do is I'm going to compare my lines on from the daily to the weekly and see if they are in alignment. And if they're not, I can make some simple adjustments. So I'm really above these points here. So I can take this line, I can bring it down a little bit just to tighten it up. And that's, it looks a little bit better to me. It didn't quite touch here, but it does touch here and it touches here. Then this line looks pretty good to me. Okay, I could bring it down a tiny bit if I wanted to. Right. Again, I'm looking for as many touch points as possible. This line here didn't have as the touch points on the weekly, but there were several on the daily chart. So I'm going to leave that. And then, of course, here, you have this touch point here, touch point here. So I feel good about the levels that I've established both on the daily and the weekly. If I go back to the daily now, and I zoom back in on this area that we're looking at, which is as AMD was making a double top here. Okay. Now, at this point, I'm happy with the lines that I have and the levels. So I can just, from here, I can just set up limit buys at these levels and just set it and forget it and let them fill as it happens. Now I'll go back and I'll change this back to a candlestick chart. And I'll just now start following. Here's my levels that I'm going to look to buy at. 4 different levels. And as I start watching AMD pulling back, there's my first buy. Right here, I just got triggered in. So maybe I bought 25 shares, maybe I bought 50, or it could be 100, whatever your account size allows for. Bounces a little bit, comes back down. So I would have got triggered in on my second buy right here on this candle. And it's a hammer candle. Okay, so I could expect a bounce out of here. Comes back down. Now, back up a little bit. So here's my third level where I just got filled. And you'll notice here is that daily 200. And where did it touch? Right to that 200. So again, I know on the daily, AMD likes to come back to the 200. Then if I move forward on this candle, I get filled on my fourth area that I wanted to buy. So now each level that I've identified, I've gotten filled. And again, I want to point out this jagged line here, this jagged blue line is the weekly 50. So I have an indicator that plots the higher time frame indicators on my lower time frame. So I know looking at this jagged line, that is the 50 on the weekly. And it came right down to it, filled me, bounced off of that. Definitely would have filled me there. So now if I move forward, now it's made a double bottom. I'm just looking for it to resume that bullish trend. And again, every time that you leg in here, you're lowering your cost basis, right? So you buy this level, this level, this level, and this level. Every time that you buy, it's lowering your cost basis. So I'm just now holding, waiting for AMD to bounce. And it just chops around for a while through that area. Then it starts to make its move, okay? So I'm holding all through here because, again, this isn't a strategy where you want to hold. You want to accumulate the shares. You want to be able to hold and look for the bigger move. So I'm okay holding through all this. AMD finally starts to make its move. Didn't break this high over here, but it did get close. It got up, kind of double topped, came back down. Then it makes the move. And look at all the increased volume. Look at all the volume that comes in here on this move. Pulls back a little bit. Fast forward. And then just chops around through here for a while. Then it makes another bullish move up. And then if you had the holding power, you could have held through all this and exited somewhere up here. You could have used a trailing stop, any number of ways that you could have managed this trade. But the point is identifying these buying levels, buying the dip, holding it, and waiting for the whatever ticker it is, in this case AMD, waiting for it to resume that strong bullish trend. So I hope you found this helpful. If you are a member of Real Life Trading, I want to thank you for being a member and for your support and your loyalty. If you are not a member of Real Life Trading, please head on over to reallifetrading.com. We have a great community. You can sign up. We have a live trading room that takes place every single day. You can exchange ideas in Slack. I can't say enough good things about reallifetrading.com. Thank you for your time. Appreciate it, and hope to see you in the future.